Hi there, everybody. My name's Stuart Rogers. I'm a corporate tax partner at FC, based in the Bristol office. And today I'm going to be talking to you mainly about R&D tax credits and give you a bit of an overview of current challenges in relation to R&D, and then really subsidiary to that, I'm going to pick up on a few comments around the budget from earlier on this year, and then just some things we're seeing around corporate reorganisations. But the main focus, it has to be said, is going to be on R&D tax credits and the current some of the current challenges that we're seeing around R&D. So I'm sure most of the people watching this will know a reasonable amount about R&D tax credits, but it's worth going back through a bit of history so that we can kind of understand what's going on in the present. R&D tax credits introduced back in 2000, and in those days HMRC didn't know too much about how to kind of audit and inquire into and check R&D claims, and neither did we as a profession, because it was a brand new concept, a brand new system, and there was a lot of cooperation, a lot of engagement between HMRC and the professions and taxpayers, and really looking back, some halcyon days. HMRC formed specialist units in 2006. And those inspectors in those teams were senior inspectors, experienced, and there was active engagement between the guys in those units and advisors. And HMRC regularly opened inquiries into R&D claims, which was what they were supposed to do right from the off. And the positives from that, if you like, were that we kind of knew what issues HMRC were concerned about when reviewing R&D claims, and we knew where they thought the R&D threshold sat and the standards they expected, and the engagement was, in overall terms, pretty helpful. After that, HMRC audit activity started to diminish, probably around 2011, 12, something like that, and those specialist R&D units that I referred to, well, they were effectively disbanded in around 2016 because of HMRC reorganising things internally. But effectively, a number of those experienced inspectors that I referred to would have entered into retirement, would have been moved to different teams, and they wouldn't have been replaced in the same number as they originally started out at in around 2006. And that really has, probably from sort of early 2010s onwards, created a bit of a vacuum for the no-win, no-fee R&D boutique to thrive. So there's some pretty good firms now that have grown up out of that, but there are also many that actually sit in what I would call the unregulated space. So firms that are not affiliated and not monitored or registered with the ICAEW or with the Chartered Institute of Taxation. And because there's really been a very low level of R&D inquiry activity from HMRC, particularly since 2016, there's just been a real lack of understanding about where the R&D threshold sits, what HMRC's current kind of views on certain things are, and a reduced chance of inquiry, which has just encouraged claims to be made. And within all of that, a real lack of understanding around how the 28, 30-day check and process element of the R&D regime is currently working. So R&D is effectively a grant, and it's, once that grant is awarded, i.e. you make the claim, the intention is that the business to which that grant has been awarded then uses it in its business to invest in further R&D work or new jobs, new products. And but in order to do that, the business is always going to need some certainty that HMRC aren't going to ask for that grant back at a later point in time, i.e. at a point in time after which the grant has been spent. And the way around that from HMRC's perspective was that you had this check and inquire system. And basically what that meant was HMRC committed within 30 days broadly of receiving an R&D claim that they would check and either process the claim and refund the money, or they would open an inquiry. And for many years, we've assumed that that commitment was one that HMRC continued to meet. But it has emerged in the last year or two that actually HMRC have not been operating the 30-day check and process, check and inquire system in the way that it was intended to. And that means people were given essentially false comfort that their claims were good. And I'll come on to that in a second. So in terms of history, in 2020, the National Audit Office criticised HMRC for really a lack of effective policing of many different reliefs, but R&D was kind of near the top of the list. And that, is kind of borne out by what we were seeing day to day, week to week, which was very, very few R&D inquiries compared to the number that we'd seen prior to sort of 2010, 2012. In 2021, HMRC explained and announced that an organised crime gang had attempted to exploit R&D tax credits with numerous low-level claims. So they set up companies at Companies House that weren't actually doing anything, but then submitted R&D claims at a relatively low level for each of them. And HMRC tell us that they managed to identify that. They probably identified it because those businesses didn't have VAT or PAYE registrations, amongst other things. But they managed to identify them, and HMRC say that they prevented a £3 million R&D fraud, and that in many ways is shaping HMRC's view of R&D today. So what's happened more recently? Well, following that NEO review, I think we all realised that there would be more inquiries, and I think that was something that certainly in the professions we welcome quite a lot. HMRC formed a compliance check, an R&D compliance check team in kind of summer of 2022, which is part of HMRC's campaign and projects group. And the campaigns and projects group or team is designed to deal with very large numbers of inquiries, and they're probably on the more aggressive side. And so what actually has happened is we've got around 250 very poorly trained caseworkers with little experience or training in general around how to run an inquiry, but also very little training or understanding of R&D tax credits. And they've got very little supervision from capable, experienced inspectors, and they are opening literally thousands of R&D inquiries at the moment. They've opened literally thousands since the middle of 2022, and they're continuing to open them. They're mostly opening inquiries into claims below 100,000 and claims that SMEs are making rather than large groups. But there are some outliers. There are some claims that are under inquiry for hundreds of thousands, if not a million or two, and some larger companies. And we've also seen HMRC open an inquiry into an R&D claim for £1,250. You'd have to question why a taxpayer would make an R&D claim for £1,250. But the point really is that HMRC are working on basically a scattergun approach, and there's no great rhyme or reason to the inquiries that they're opening. They tell us that they are risk assessed, but the evidence is that they're not. It's just completely random. The letters that we're receiving are of exceptionally low quality. So you're talking about letters with very, very poor spelling, poor grammar, duplicated paragraphs copied and pasted into a letter from another letter, but leaving all of the details of the other taxpayer or the other claim embedded in the paragraph without being changed. Lots of very silly questions from HMRC, lots of questions asking about information which has already been supplied, lots of questions indicating a real lack of understanding of the R&D tax credit legislation itself, lots of questions indicating that the letters being produced by junior caseworkers are not being reviewed by anybody who knows what they're doing. The caseworkers are also working in a team basis. So what that means is there is no allocated inspector to your inquiry. It means that when you submit a response, the person who picks it up in the team is the person who's got current capacity to do so. And that effectively means that you're starting back at the beginning in terms of the understanding that the individual reviewing your inquiry and your claim has got of the case, and that's frustrating. That means questions get asked multiple times, and it's just not very good all round. The challenge, though, is that HMRC is setting an exceptionally high bar around what they think R&D is, and they're cutting procedural corners. What do I mean by that? Well, it's been the case for the last 20 years that the way in which HMRC operate an R&D inquiry is laid out in their manuals, in the R&D manuals, and there's some pretty clear guidance around how HMRC should approach an R&D inquiry. The R&D compliance check team are paying very little regard to the conduct of the inquiry section of those manuals, and whereas going back 10 years, we'd expect R&D inquiries to often end up in a face-to-face meeting at the business premises so that HMRC could understand the business and then the R&D project that was being claimed. HMRC are not prepared to meet with a claimant company. They're not prepared to even speak with the directors on the phone. And we've established by making complaints to HMRC that the reason for that is that one of the reasons for that is that the R&D compliance check team has not been sufficiently well trained to even phone a taxpayer or meet with a taxpayer. But HMRC are claiming that, notwithstanding that, these caseworkers have had the necessary training and have got the necessary skills and experience to objectively and fairly review an R&D claim, and that's something that I just fundamentally cannot reconcile. So this is a massive change in terms of how HMRC has approached R&D compliance for the last 20 years. HMRC historically took the view that in order to review an R&D claim, you needed to be a specialist. It appears now, the people in the R&D compliance check team are the most junior caseworkers that HMRC employs. The people reviewing their work, or that we're told review their work, are at a level lower than would have been allowed to work in the R&D specialist units previously. So it's just complete change in the way in which HMRC are approaching R&D compliance, and it's much more aggressive than we could ever have imagined over the last 20 years. The House of Lords have been looking at the way in which HMRC have been approaching things. They undertook a review before Christmas, which culminated in a report being issued on the 31st of January, and the House of Lords Economic Affairs Committee were pretty critical of HMRC's approach to R&D in general, criticising them for not policing the system properly and not dealing with things as they should have been, not opening the number of inquiries that they should have. But also a big proportion of the report was dedicated to the way in which HMRC are actually opening those inquiries and operating those inquiries, and the fact that the resource that they've got available it appears to be insufficiently trained, insufficiently experienced to run those inquiries properly. And the ultimate conclusion from the House of Lords was that HMRC are actually very close to breaching their own charter, which talks about a number of things. It talks about treating taxpayers fairly, but it also talks about ensuring that HMRC put forward a person to run an inquiry who's got the necessary skills, training and competencies and experience to run the inquiry in a way that's fair for the taxpayer, i.e. that the caseworker needs to fundamentally understand and be competent in that area of tax law. And our experience to date is that's just not the case. There have been a lot of complaints that have been made about HMRC's approach. So there are formal routes to make a complaint, and we've certainly made a number of those, and we understand that that's really clogging up HMRC's complaint system, and that complaints which normally take HMRC about 4 weeks to deal with are currently running at 8 to 10 weeks. The Chartered Institute of Taxation are involved in a direct dialogue with HMRC on all of this, as now I believe are the British Chambers of Commerce. But HMRC is standing firm. They've rejected all of the complaints that we've made. The complaints are going as high as the ministerial complaints team at HMRC. So HMRC has a team of people who are dedicated to complaints made from pretty senior places, and I think they report directly into the financial secretary to the Treasury. All of those complaints are being rejected. So that's telling us that the commitment for this approach, or towards this approach, is actually coming from quite a higher position within government and the civil service. And that's been backed up by HMRC's response recently to the House of Lords report that I referred to. HMRC have effectively rejected most of the if not all of the meaningful recommendations that the House of Lords report made in January, and that's really, really disappointing. We'd hope that HMRC would read that report and would pause for thought and may change direction. And that's just not the case. So, how do we deal with this and where do we go? Well, I think that the likelihood is we're going to see a number of cases actually go to tribunal, so the first tier tribunal. And I think their judges will want to examine HMRC's approach, their refusal to meet taxpayers. It doesn't seem sensible to me for HMRC to go to court when they've refused to meet a taxpayer to try and resolve something. I would have thought that was more expensive for them. But it seems that's how they're intent on dealing with things. I think for clients who have got R&D claims that they may be looking at making, I think there's some sense for some clients in deferring making a claim just to actually revisit what they've done historically, even if they've not got an inquiry, just to have a look at what they've done historically and determine whether, given the current trends, whether another claim is sensible. And if it is, when you might make that claim, obviously a claim has to be made within 2 years of the end of the relevant accounting period. You might want to go make the claim because it gives you a cash boost, but it may be that that's not such a pressing matter, and a claim might be just deferred until more is known about HMRC's approach to all of this in the slightly longer term. But of course, the moment that clients decide not to make a claim, or that they're going to defer making a claim, you have to question whether the entire R&D tax credit system is fulfilling the purpose that it was introduced to achieve. And Rishi Sunak has made public announcements quite recently that he's fully behind the R&D tax credit system. But I would suggest, and we have suggested to HMRC and the Treasury directly in correspondence, that actually this approach from HMRC, scattergun approach, and this kind of cutting of procedural corners approach is actually causing quite a lot of alarm, and businesses undertaking genuine R&D are going to be put off making claims unless HMRC can find a better way to approach all of this. In terms of how R&D looks going forwards, that's also an area of some contention and debate, really. So what we do know is that from the 1st of April, there have been significant reductions in the R&D rates for SMEs, and there are additional information requirements, which this slide says 1st of April. But actually that's just been delayed, and it's 1st of August. So there's additional information that's required with all claims from 1st of August. Those information requirements are designed to give HMRC more information at the point of submission around a claim, to allow them to consider the risk profile in relation to that claim and open inquiry if they so choose. And we had another R&D consultation which ran from January to March 23, and the mood music and the content of that consultation suggested that where we're really going is predominantly one single R&D regime probably from 1st of April 24, but who knows, and that will be effectively achieved by the abolition of the SME regime and some improvement to the rate available under the large company, the RDEC regime, and some clarifications around who in the supply chain can actually make an R&D claim. There are some confusing interpretations of the existing legislation by HMRC at the moment around where R&D is subcontracted, or where an R&D claimant company provides a service to a third party and undertakes R&D as part of that service, or to achieve the delivery of that service. As I say, HMRC are coming up with some very confusing interpretations around the current legislation, and so anything that can be done to the legislation to make all of that much clearer and to give certainty to businesses is to be welcome, albeit HMRC's approach to that over the past few years has been pretty disappointing. So I think in terms of actions, my very strong recommendation is don't rush your R&D claim. Speaking with many colleagues, I think there's a sort of a difference of understanding or appreciation around what we all think is a robust claim and what HMRC currently thinks is a robust claim. HMRC's threshold is very high. I think everybody needs to critically review their R&D claim, identify the weaknesses in the claim and try and deal with those. Claims need to be really well disclosed and well thought through and prepared. I see quite a few clients insist that they want to file R&D claims with absolutely no supporting narrative or documentation. That really is to be discouraged for many reasons. Number one, it puts a target on your back because you're not giving HMRC what they want to determine whether the claim is valid or not. But also because you're not disclosing fully, you're actually leaving or giving HMRC a longer period over which they can challenge your R&D claim. So if you're well disclosed, arguably HMRC have only got 12 months to open an inquiry. If you're poorly disclosed, they may be able to go back up to 6 years. The other thing to sort of consider, as I've mentioned, is do you submit now or do you delay? But you might delay to gather more information and get somebody else to review the claim, get Francis Clark to review the claim. But you might also delay just to wait and see where this story goes, particularly if you're not in immediate need of the cash and you've still got plenty of time until the hard deadline, and the hard deadline is 2 years after the end of the accounting period. So just some things to think about there. I think the key thing is to keep abreast of the story, because every week that goes by there's sort of a new material development, and we've got new evidence, and we're talking to about 10 other mid-tier accountancy firms as well as the CIOT directly, and we're getting intelligence from those other firms on a redacted basis. So we're seeing what they're encountering with correspondence with HMRC, and that's really interesting and helpful. So I'd really encourage people to keep abreast of the story. We're going to be doing another deep dive webinar on R&D in around a month's time, which will be longer than this, but also we regularly e-shot the clients. And there'll be things posted to our website. So please do keep an eye out for that. It's worth just touching on full expensing and the budget. So budget 23, March 23, there's always lots that goes on at a budget. A lot of it is behind the scenes. So most people will watch the Chancellor get up and talk from the floor of the Houses of Parliament. But for us as tax advisors, there's a lot of detail that HMRC post in the aftermath of the Chancellor's speech. Lots of technical material that we need to get through. Most of that in March was a continuation of processes of consultations that HMRC had already announced or are ongoing. The one big thing really that came out of the budget in March from a corporate tax point of view was full expensing. So most of you will know about the super deduction, which ran from 2021 to 31st of March 23. That's been replaced by full expensing. Effectively, it's economically the same as the super deduction. So the super deduction was a 130% first year allowance, where the mainstream corporation tax rate was 19%. The full expensing regime is a 100% first year allowance, but at a point in time when the mainstream rate of corporation tax is 25%. And economically, those two regimes achieve the same amount of tax relief in absolute terms. Like the super deduction, full expensing is full of sort of traps for the unwary. So full expensing, like the super deduction, doesn't apply to second-hand assets. You need to be careful about assets that you lease out, assets that are motor cars. Full expensing is only available to companies. So if you're an unincorporated business or an LLP, then you won't be able to get it. And then you've got there's a mix now of capital allowance regimes, and you've got to work out which one your assets fall into and which one because some of them you can choose where you put your asset to get the best relief possible. And you've got the annual investment allowance, you've got other first year allowances. You're going to need to, with a little bit of care, work out what your asset is, which regime it can go into, and then how you choose whether it's full expensing or the annual investment allowance or whatever else. So just a bit of care there. I think the other thing to say is that the natural outcome of government's approach to incentivizing expenditure on plant and machinery, which is to give, for most businesses, quite a lot of upfront tax relief, is that your deferred tax balances are going to grow. Your current tax is going to be sheltered by these pretty generous reliefs in the year that you incur the expenditure, but your depreciation policies aren't going to be in line, and therefore you're going to see your deferred tax balances grow, which over time will then convert back into current tax. Finally, I just wanted to pick up on something that we've seen quite a lot of over the last year. We're doing a lot of reorganisation work of corporate groups for a variety of different reasons, and that could be just simply the insertion of a holding company above a single trading company, and usually we do that where we've got a really successful trading company which has accumulated cash and may have some real estate in it, or maybe some IP, and then what we do to try and de-risk the situation a little bit, if there are particular risks with the business, is to pop a new holdco on top and move that excess cash and maybe the real estate and maybe the IP up to that holding company. We've also done quite a lot of work around reorganising existing groups into business units, which better reflect the likely future possible future disposals to third parties. So we're really packaging up business units ready to be sold outside of a sales process, because once you get inside a sales process, doing those things is pretty difficult. There's so many other things going on, and those processes can end up being rushed, and they give rise to problems later on down the line if not well thought through. So we're doing quite a lot of that. For those larger corporates that are actually family owned, that are integrating the group structure with a family investment company type approach is something we're doing more of, so that once the main trading business has been disposed of and the family's got that cash to reinvest, we're actually thinking about how we do that and what the kind of IHT and the long-term family tax arrangements are, the shareholding structure and so on. So that's a big new feature of what we've been doing in the last year or two. And then demergers of existing groups and existing standalone companies into parallel structures to facilitate an EMI share scheme, or maybe to take in some third-party investment. We're also seeing a lot of that. The main point I really want to make about reorganisations is that when you do one of those things, you need a lot of engagement from the client. You need a lot of engagement from the tax advisor and a lot of engagement from a lawyer. There are also a lot of accounting issues and company law issues which come into play. Things like ensuring you've got proper distributable, or proper, but the right amount of distributable reserves to do the kind of transaction which you need to do to facilitate the reorganisation. Those things don't take 5 minutes. They also rely upon up-to-date and accurate management accounting information, and I think 3 to 6 months is often what it takes to get one of those projects done and dusted. So do think about that when you're planning a reorganisation. It won't be a 5-minute job, or it may not be as quick as you'd like it to be, and a bit of foresight and advanced planning would yield quite significant dividends. On that note, I think I've come to the end of my slides and the end of my time. Hopefully that's been a really useful session. If you want to listen to a deeper dive into the R&D subject matter, then I think that's early July, and just keep your eyes peeled for the invites on that one. Cheers.